Hi everyone, today we're talking about Alibaba, which is kind of like a stock which I have talked about pretty much like once a week on this channel at the moment. I can't stop talking about Alibaba at the moment and a lot of the Chinese stocks because they're just absolutely undervalued right now. Obviously there's a lot of questions about the Chinese economy and it's slowing down, but when you look at the fundamentals of Alibaba, what a company it is, and basically as we're recording this video, Alibaba is down about 5%. But just the other day, a analyst from Goldman came out and predicted that Alibaba shares will rally more than 50% in 1 year. Now, I've talked on this channel that I believe Alibaba is massively undervalued. I believe that Alibaba should, if there wasn't this China trade war right now, I reckon that Alibaba would be in the 200 range and probably around the 220 plus kind of range. And the analyst from Goldman came out and he pretty much confirmed that the same thing that I believe. And you look at the fundamentals of this company and it's massively undervalued. Even when the economy slowing down, you look at how Alibaba is growing in all the sectors that it is growing, and it should carry on going up. And as long as that P keeps dropping, it's just getting more undervalued as the day goes on. So we're just going to have a look at what this Goldman analyst said. So Goldman Sachs reiterates its buy rating for Alibaba shares, predicting strong growth in the economy's cloud computing and financial businesses. A lot of people forget about Alibaba, and obviously they've got the main kind of company side, but that they've always done on the retail end of it. But when you look at the cloud growth of 100% and the financial business side of it, it's something insane that's going on in that company. So many multiple streams of money coming in. It's really impressive. We expect Alibaba to continue to invest for future growth on multiple fronts, analyst says. Alibaba will thrive as it dominates new markets in China, according to Goldman Sachs. The firm reiterates its buy and conviction list rating for Alibaba shares, predicting strong growth in the company's cloud computing and financial businesses. Remain impressed with Alibaba's overall leverage to China consumption growth, given its strategy, positioning, ability to build new businesses such as new retail, and its execution, analysts said in a note to clients on Wednesday. So pretty much it's saying to all its clients, go out and buy Alibaba shares because of all the multiple streams it has going on. The price tag was raised from 247, which is to 247 from 241. So not pretty much a big massive increase in its price. I think this was kind of more of a Goldman Sachs analyst coming out and saying, look, do you realise how much of a discount that Alibaba's at? I'm just letting you know again that this stock is massively undervalued and you have a really good opportunity to buy. I think that's the whole point of what the analyst had come out to say here. Because if it was a proper price increase, we probably have seen this stock got raised from 240 to 260, 270, around that range. But for it to only upgrade it by $6 and saying how strong it is, it's just pretty much a note, just reinforcing to clients, look, at the moment it's down. If you're a short-term investor, then obviously that's a problem. But if you're all long-term investors, like most of us are on this channel, if you watch, you're probably a long-term investor, then as a long-term hold, this is an absolute bargain that you should be buying at. You've got a 50% upside in this stock, we believe, so go get buying some shares. And that's pretty much what he's saying, and I totally agree. Alibaba is, at a massive discount. It is one of the most undervalued stocks on the stock market right now. It's easy money. As much as easy money gets, this is it. This stock should be around the $240 range next year for sure. When you look at the growth side of it, how long can Wall Street kind of look the other way while we've got a company that's growing at 50% revenues? If it was any other company in the US, this stock would be up 100% today for sure. So yeah, it is a bargain, and we've got an analyst from a big firm, Goldman Sachs, coming out and saying the same thing, which is kind of reassuring that quite a few people have this opinion on it. You can go on to like CNN and you can see how many analysts are pretty much saying that this stock is massively undervalued. A company like this is normally having a P around the 50 mark, and it's around the 20 mark, so that's how undervalued it is. So it is a bargain, and I think this article backs it up totally, guys. So I'm just sharing that article with you on Alibaba. I know I've got a few people that like Alibaba watching this channel. So give the video a like, guys, subscribe. Thanks for all support recently, it's been amazing, and I'll see you on the next video.